Hey guys, and welcome back to a new accumulation zone video. In today's video we are going to be talking about high time frame to low time frame scalping. Let's get right into it. Today I published a new indicator called importance of time, and we're going to be talking more about the indicator in a later part of this video. But first of all, I want to explain the general concept of how important time really is in your trade. So let's get started with 4-hour breakout traders. So imagine we have some structure forming here that we would consider previous resistance. Now on a 4-hour chart, the most important point here to get is that a 4-hour trader, a 1-hour trader, and a daily trader, they enter on the market at 4-hour candle closes, 1-hour candle closes, or daily candle closes. Lower time frame traders, they enter into the market more oftenly because they get more opportunities to enter into the market. So a 4-hour time frame trader only has around 5 or 6 opportunities or 5 or 6 daily candles forming, giving him an opportunity to enter into the market. And in my opinion, most of the traders are higher time frame traders, especially institutions. So a new 4-hourly candle, right, this one here, just closed above a previous resistance. So 4-hour breakout traders are looking to take this opportunity to long into the market. So let's change the color of this first. That's just a visualization of how price is moving. So now we get 4-hour volume entering into the market. They're going to take one of the only opportunities they get during the day, and they drive price up higher. Price is going to continue going up higher, higher, higher. Now they're trapped. That's really important. So now all those 4-hour traders are trapped into a long position. And what those big market manipulators like to do is they like to trap traders, hourly, 4-hour, or daily traders, into a position to basically reverse the trade they're in, taking the short side. And so the 4-hour traders are losing money while the market manipulators are making money. Someone always has to lose money in order for someone to make money. So what's happening out of this bullish candle, this is not a full 4-hour candle yet. This candle has closed. It's still forming. It's going up higher. More and more traders are jumping into this market before some big news happens or some big manipulation happens, and out of this whole body candle we are actually forming a bearish candle, closing it somewhere around here, leaving us hanging there with a huge ass wick right here to the top side. And now the 4-hour candle is closed, and all those traders that got into the market in a long position right here above the previous candle's close, 4-hour candle close, are now trapped in the market, and they are hoping that they get back to their break-even price. But most of the time, price or the manipulators don't allow them to let those 4-hour breakout traders to basically let them go with a break-even. So this candle usually continues to fall, continues to fall, continues to fall, with more and more 4-hour traders getting liquidated or closing their positions, while big manipulators make profits on this whole move to the downside. If we look at this 4-hour chart example on a 1-hour chart, we could be looking at something similar to this. So each of those ranges represents a 4-hour range. So within this one 4-hour candle, we have a total of 4 1-hour candles. So however they are aligned, we slowly but surely walked our way up above our previous resistance level. So this candle closed above the previous resistance level, and now not just 4-hour traders are being triggered long into the market, also 1-hour traders, because what's happening is we get one more bullish candle, one whole hour after a new 4-hour candle basically is opening up. The same thing that happened here. This is all fractal. So this pattern here, or this chart, is a fractal of what we see here. So price keeps going up higher because hourly breakout traders are now also being triggered into the. Now, most of the retail traders are positioned in a long position. And for market manipulators or for the smart money traders to basically make money with those 4-hour and 1-hour breakout traders, the easiest way to do it is to reverse the position. So usually what we see within a 4-hour range is a continuation in the general trade direction to get as many people as possible on this 1-hour chart into this trend to the upside, or on this 4-hour chart into this new trend to the upside after breaking through resistance, moving it up higher and higher and higher until we get into the 2nd hour, and out of the dark, out of the nowhere, basically, we are bearish and we're forming this bearish candlestick right here with 1, 2, 3, 4 1-hour candles. In order for someone to make money in this environment, in this business, someone else has to lose money. And there's no better opportunity for them to let people think that prices are going to continue up higher, higher, higher. 4-hour traders, 1-hour traders, prices are going up. They're jumping into the super bullish candle right here at the new hourly open, which on a 4-hour chart turns out to just be a blow-off wick with a bearish engulfing to the downside, with all those long traders in their long positions being trapped, losing money while someone else is making money. The great opportunity we as scalpers have on a 1, 5 or 15-minute chart is that within this right here, what hourly traders see and regard as, okay, this is going to be super bullish, I'm getting into this break through this resistance trade, we could be seeing right here in this brown box, we could be seeing some sort of a double top pattern or whatever reversal pattern you'd like to see. Of course, that's not happening on every 4-hour candle close, but sometimes you can really point it out. I will later on show you an example on the chart here on Euro Japanese Yen, how you can apply it on a real chart. But what we are doing is basically we are looking for, on a low time frame, we're looking for reversal opportunities after this 1st hour, basically. And then we see a beautiful double top M formation at this top with a pin hammer, basically, with this beautiful wick to the upside, confirming this whole thing. So everyone that already entered in short into the market on a low time frame most likely got liquidated or jumped in long again. So for the traders on a low time frame who might have even gotten the direction right, most of them are being liquidated with one big wick like this until before we are continuing in our intended trade direction. Let's have a look at a real chart example here on the Euro Japanese Yen 5-minute time frame. So with this new indicator, importance of time, it's not a big indicator, it's only helping you to basically stay on track with the higher time frame by scalping on a low time frame. So you can show the 4-hour ranges, which are highlighted here with this white stripe. You can also modify the colors, and you can also show the 1-hour period separators if you like to. So let's have a look at what I explained earlier. So right here we have a 4-hour period. Within this 4-hour period, from the open to the close, we formed a bullish candle to the upside. So now 4-hour traders be thinking, I'm gonna be longing into this market because this is all my conditions align and this is a super massive bullish candle. I wanna enter in onto this trend. So now this 4-hourly candle closed, and what price did here perfectly. That's why time is so important. It continued going up higher after this 4-hour close to trigger more longs into the market. But look at the candles here. Look at this indecision, those big wicks and dojis and inverted hammers. And once it's a normal hammer, it's not normal price action. So while basically smart money traders and hedge funds and institutions are already slowly scaling into a short position, for example, with indications like this candle here, hourly traders and 4-hourly traders, because what's also happening at this 4-hour candle close, there's a new 4-hour candle opening up, but also a new hourly candle. So for hourly traders, we also just formed a super bullish candle. So now hourly traders are also being triggered into this market with a break above previous resistance right around here. So now for the total of the next hour, from basically 9 a.m. until 10 a.m., the market continued in the direction of the trend before of hour 1 and 2 prior to that, and the trend of the 4-hour higher time frame candle, continuing up higher, continuing up higher, continuing up higher, until perfect 10 a.m. New York local time. What's happening here? We get one more bullish candle for a high close 1-hour candle. 4-hour traders are not being triggered into this market. They have been triggered into this market here, as well as hourly traders. But now, for another time, hourly traders are triggered into this market with a new bullish hourly close. So maybe hourly traders who got in late to the party, they might consider this still a valid entry to take it long, because I mean, it's been trending the whole day. It could easily continue up for one more hour. But what did we get? Exactly after the 10 a.m. New York local time candle close, hourly candle close, within the second hour of our next 4-hour candle range here, we had a super bearish candle with all the long liquidity being trapped right here, basically dumping price on them. So smart money traders and big institutions, hedge funds, whoever, big banks can benefit and make money and basically take the money away from all those 1-hour, 4-hour breakout traders that are now currently trapped into the market long. After this big move, banks basically maybe switched off their algorithms or maybe called it a day, and price just kept consolidating because buyers were exhausted, sellers were exhausted. Now price just kept consolidating for the next 2 hours within this new 4-hour candle range. I hope this example really points you out how important it is, how important time is in your day trades, especially if you're trading it on a 5, 15 or 1 minute time frame, because you get all the insights of what's happening within this hourly candle, 4-hourly candle. It's all part of it. It's all fractal. The whole market is fractal. So now our new 4-hourly candle closed right here, and a new 4-hourly candle is opening up. For hourly traders, we basically right here broke above this hourly high right here. Those two were just some consolidation dojis. We broke above the high, triggered longs into the market again, before eventually reversing price, triggering shorts into the market below this 4-hour low, before eventually reversing it back up, making it really hard for them to basically hold on to their position, because the market is just consolidating for 1, 2, 3, 4 hours for the whole new 4-hour candle. But now the important part comes. So now, after we saw on a 5-minute time frame, as we said, after we saw this 4-hour candle basically just moving within this range, extending the consolidation from the previous 2 hours prior to this new 4-hour candle, we just expanded this range. We continued consolidating until the next hour. After this 4-hour candle close, a new 4-hour candle has opened up. It doesn't look like 4-hour traders have been triggered short or long into this market, but what's important is now that during hour 1, nothing happened. During hour 2, we broke this range to the downside. We pulled back. We retested perfectly the previous 4-hour candle low, because right here we have our low point, our low wick of this 4-hour doji basically. So now we broke this doji, we pulled back to this doji and continued with the trend direction. That's super important here. That's why higher time frame levels and time is so crucial for your trading. This is, you wouldn't even need indicators. This is just a little helping tool for you to visualize that at 1 p.m. New York local time, a new 4-hour candle is opening up. And at 5 p.m. New York local time, a new 4-hour candle is opening up, because I know it myself from my own experience. If you look at a chart like this and you're right within a trade, or you're looking at doing your analysis, you barely look at the price really, or you barely check your price up here. It doesn't happen. That's why an indicator like this can help you managing this market, because now you can think, okay, what do hourly traders see on their hourly chart, because you see the fractal movement of their hourly candle. Okay, new hourly candle close, we moved above the high of this previous hourly candle, so longs might have been triggered into the market. Reversal, consolidation, consolidation. So you can perfectly imagine what this 4-hour candle looked like by simply drawing some boxes, or if you really got used to the concept. Right here we had a doji, basically. We closed here and we open up somewhere around here. So the body of this candle would have been very, very, very small. And the wicks would have been going up to this high and to the low point right here. That's what the 4-hour candle looks like on a 4-hour chart. So 4-hour traders are not really interested getting into this market right now. What happened? We broke the low of our previous 4-hour candle, triggering maybe shorts into the market before reversing it, forming actually a super, hang on, this is the wick for our new candle. Let's use a new rectangle for our new bullish, even bullisher candle. So now what's happening? A new 4-hour candle is opening up. We moved above our 4-hour candle high. We moved above it to trigger 4-hour traders long into the market before basically sorting out or shaking out weak 4-hour buyers here. So they longed into this market as soon as this 4-hour candle closed, because they saw, okay, price keeps moving higher. This might be a safe trade, so it might take profit, blah, blah, blah. So for example, those 4-hour traders that entered into this trade with a too big of a position size, or they did not consider that price could go against them for a little while. What happened is, during hour 1, we kept consolidating. During hour 2, we continued to drop down further, shaking out more and more of those weak 4-hour buyers here that went long on this market, on Euro Japanese yen basically, right here, shaking them out before actually in hour 3 of the next 4-hour candle continuing the move to the upside. So all the weak buyers that maybe got already liquidated at this point right here, or that maybe had their stop loss below this low, or I don't know, it could be many ways to place your stop loss here, but this is a very crucial part for scalping. At least with my scalping, it really helps me to filter out bad trades and get a perspective what other traders are doing, because what we see here on the chart is a confluence of all the traders that are spread across all different time frames, all looking at the same chart. This whole movement we see is a representation of that. Alright guys, I hope you enjoyed watching this video. I put a lot of work and effort into this video and into trying to explain you the point of how important time is in trading. Hourly closes, especially on a low time frame, on a higher time frame, basically taking higher time frame candles down to a lower time frame, making sense of all the price action, because it is clearly not random that something like this is happening, a 4-hour close continuation before completely dumping on all those longs, consolidating, retesting the lows, continuing to break out lower. So if you like to scalp on a low time frame, make sure to check out the importance of time indicator. The link for that is in the description below. And if you haven't already, make sure to give this video a like and subscribe to our YouTube channel. I will see you in the next accumulation zone video, guys. Take care and trade safe. So while I was editing the video, I was still watching the SPX 500 chart on a second monitor of mine. So what I saw, it's the perfect example of why time is so important when scalping a lower time frame. We basically redid the whole setup I just explained to you in the beginning of the video. We formed a M formation top, and where did we reverse? on the new hourly candle. Right here, new hour, 10 a.m. New York local time, like in the example. We got this last bearish candle with some Scalper Pro confirmation of a divergence. So we made a higher high. Even if it's just a slight higher high, I think the wick actually went up a little bit higher than that. That's where the wick ends. And on the Scalper Pro, we formed a high right here, but we formed a lower high right here, even though prices went up higher, or at least they've been equal. So something's not matching up here. We have a active or valid divergence here, and time is also on our side. So right now I entered into this trade after this 5-minute candle formed. Already hit a 3-to-1 risk reward ratio. Very beautiful. I am holding the last 25% of this position until the next hourly candle close, which would be sitting right here, because this thing could easily fall for the next hour, like it did in our example here on the Euro Japanese Yen chart. We had this continuation move to the upside. We did not form a beautiful M pattern or something like we did on the SPX, but I hope you guys can see this clear M pattern with the first move to the upside, to pull back down, the move back up with a beautiful Scalper Pro divergence, and now with the new hour continuation to the downside. Actually, I can't believe it how perfect the example is. On our 1 hour time frame, we have our previous resistance here, our high from yesterday basically. We went above it, triggering longs into the market before doing what? Dumping price on them and basically grabbing money from all the traders that went in long into this market on a hourly, or for example on a 4-hourly time frame. They got in triggered long into this market. We continued going up higher, also forming some sort of a opening gap, and boom, it's reversing on them. And right here on our low time frame, with the importance of time indicator, which is a free indicator by the accumulation zone, we see this beautiful double top pattern matching up, and exactly at 10 a.m. with a new hourly open, we got a beautiful bearish engulfing candlestick with a opening gap to the upside. So yeah guys, make sure to check out the new indicator. The link for that is in the description. And also make sure to support our YouTube channel a little bit. Click on this little boost icon. This really helps me out a lot to stand out a little bit more on TradingView. Alright guys, take care and enjoy the festive Christmas holidays.